Again, good morning, everyone. My name is Danny Fitzgerald. I'm with the San Diego Imperial Small Business Development Center. This is our Meet the Lenders series. We do at least one of these every month. This month we're doing two. This one we're doing as a more specific target. We wanted to be able to have a good conversation around capital for new and starting businesses. We know that there's always a lot of questions around that, a lot of nuances. And our panel today is going to be able to talk about what works, what doesn't work, and just so that way to kind of level set expectations for folks as they're starting new businesses, because that's usually the most confusing time for folks, and so that's really what we're here as the Small Business Development Center, to be kind of a guide and work with you as you're setting up everything from your legal structure to understanding hiring employees, setting up your marketing plan, your business plan, and of course, accessing capital. We have some fantastic partners as panelists today to really be able to discuss that and talk a little bit about what all that is. And so, of course, at the Small Business Development Center, that is kind of one of our pillars of our mission, is helping businesses to be able to start. We help somewhere between 150 and 200 businesses start every year. We are able to walk folks through different trainings. You're able to have one-on-one advising, and even right now we're helping a number of folks, even as they complete their training programs, be able to access the California Dream Fund and get a very small grant as they're able to start their business. And so today we're going to talk a little bit about that, but I want to start off, and of course we're funded primarily by the U.S. Small Business Administration, along with the state of California through the California Office of Small Business Advocate. But we have Lucy Montgomery from the SBA's local district office. Their team's fantastic. I can't ever go without introducing someone from the district office without giving them a huge shout out. They are a small but mighty team and have helped literally tens of thousands of businesses in the San Diego region. So Lucy, take it away.
Thank you so much. I appreciate that. I'm Lucy Montgomery, and I just have a little presentation now with the ending of EIDL. I'll go ahead and get started on that. Let me just share my screen. Here we go. Are you able to see my? Yep. Great. Okay. So I'm going to start with a little introduction of the SBA.
So Lucy, if this was supposed to have audio, we're not hearing anything. It's a little bit tricky to share audio on it, so.
Okay, if you can't hear the audio, then that's fine. We'll move to the next slide.
No, if you got a link to that, you can drop it in the chat, and that's probably a great way for people to see it too.
Yeah, perfect. I'll do that. Essentially, that video is saying that the SBA is here to help you start, grow, expand, and recover your business. And how we do that is by igniting change and by making connections, particularly with the connection with the Small Business Development Center that we have here. This particular group is going to be talking about access to capital and how the SBA can help. And this is a change from what you might have heard from the SBA regarding disaster assistance loans. So we're going to talk about loans that aren't disaster assistance. So how does the SBA help with funding? First, what we're talking about today, SBA-backed loans. Second, private investors, research and development awarded funds, and surety bonds. For number 2, 3, and 4, please go to sba.gov or contact us and we'll help you with more information, or please go to the SBDC and they'll be able to direct you. But with regard to loans, the SBA works with approved lenders, some of which are on this call, to offer SBA loans and microloans. And why is that important? And how does the SBA do this? They do it with a guarantee. And the SBA guarantee helps the lender with competitive terms, helps you get lower down payments and flexible overhead requirements. That also includes counseling and education, which is very important when you're starting up your business. This is how it works. Just because it's a change, we wanted to make sure you understood that the loans, for the SBA guaranteed loans, aren't directly from the SBA, but they're through your lending partner. And your lending partner are on this call right now. What can you use the loan for? Starting up your business, launching, accessing revolving credit, purchasing inventory, equipment, machinery. You can even purchase land in real estate or use it for exporting. The types of loans the SBA works with are the 504 loans, which are for real estate. Those are handled by the CDC Small Business Finance, who unfortunately, Miriam's sick, but she was going to be on the call. So the CDCs handle the 504 loans. There are several SBA 7A lenders on the line. That's SBA's flagship program, which includes the export loans and the community advantage loans, and also working capital loans. And I believe there's a couple of micro lenders on the call now, including the IRC, which is, I think Monica Gary is on from the Center for Economic Development. And I know there's other micro lenders who we worked with in the past. Some are SBA lenders and some are not. It's very important that you know that you should choose the lender that works best for you, for your business, and make your own choice. The SBA also does disaster loans in the occasion of a natural disaster or something like COVID. We encourage you to speak to your SBA resource partners, such as the SBDC, to get your business in order, your business plan, your expense sheets, and your financials before you speak to the lender. If you have all this ready, you can go directly through the SBA website, lender match, describe your needs, get an interested lender and talk to the lenders and apply for loans. But again, the SBA found it exponentially more success if you have assistance of an SBA resource partner, such as your great SBDC, which you've already found. There are 1,400 partners, offices nationwide that are partnered with the SBA to help you find funding and mentorship. In San Diego, in addition to your SBDC, there's the Veterans Business Outreach Center, SCORE, and the Women's Business Center. You can contact directly with us. We are downtown, but we're working remote. Please follow us on Twitter and subscribe to our newsletter for updates. And know that the SBA is behind you to power the American dream. And please listen closely to each one of these suggestions by these lenders. I guarantee that they learn from experience and they can help you. Take a second and follow their advice. Thank you so much, and we appreciate you. And let me just unshare my screen. There you go, should be back. Thank you very much for the opportunity to speak to the group. And I'm looking forward to listening to all the lenders.
Fantastic. Really appreciate that, Lucy. As Lucy said, the SBA transitioning back to their regular mission. They've spent the last 2.5 years certainly doing a ton of work around disaster assistance. And that will obviously always continue and be part of their mission, but now really kind of being able to do a lot of the core aspects. And so we're excited now to kind of move into our panel. We have a fantastic panel of Rosalinda Delgado from Accessity, Robert from Banner Bank, Fernando Ponce from Primary Funding, Monica Gary from Center for Economic Opportunity and International Rescue Committee, and Mr. Fred Crispin himself from United Midwest Savings. And so we'll let each of you go ahead and introduce yourselves. And why don't we go ahead and start with you, Robert?
Hi, I'm Robert Cattaro. I run the office in Point Loma for Banner Bank. Banner Bank's been in business for over 132 years, and we are looking to do any type of business lending, consumer lending that we run into. In the branch system, we do a lot of small sized businesses that in some cases may be a startup, but if it's a startup, it would have to be a business that is got a strong, individual that's got a strong balance sheet and great credit. But as we go on later on, I'll amplify on how we're able to do that.
Fantastic. And I also forgot our other panelist, Oralia Alvarez from Mission Driven Finance. So I'll let her introduce herself now.
Yes, sir. Hi, good morning. My name is Oralia Alvarez. I'm with Mission Driven Finance, and we're an impact investment firm committing to mobilizing intentional capital to small businesses and startups that are doing good for the community, whether that's a social or an environmental impact. Thank you.
Fantastic. And Fred.
Good morning, everybody. My name is Fred Crispin. I'm Senior Vice President with the United Midwest Savings Bank. I manage the small loan division for the bank on a nationwide basis. We provide working capital loans for startup and existing businesses under the SBA 7A loan program. We provide loans from $20,000 up to $150,000, taking a lien on the business assets, and that's it. We don't take a lien on personal collateral, personal real estate, or anything else. So in a large, and we're a transactional lender. We're not a typical bank that offers checking accounts, credit cards, that sort of thing. So in a lot of ways, we can be a local bank's best friend because we'll do a lot of things they don't want to do, and they get to maintain that deposit relationship.
Fantastic. And Monica.
Hi, good morning. I'm Monica Gary. I'm with the International Rescue Committee, SBDC, and we specialize in supporting refugees, immigrants, underserved people in San Diego and Imperial County, and basically anybody else, and help with like the one-to-one business advisory services, and then help people identify what their capital needs are and work with the IRC CEO, which has loans up to $50,000 to support new businesses, especially with new Americans.
Fantastic. And Fernando.
Yeah, good morning. Fernando Ponce with Primary Funding. So we really focus primarily on asset-based loans. So we look for accounts receivables, purchase order financing. We will take real estate as collateral as well. I mean, we just try to get creative and look for whatever assets the borrower can bring to the table to see how we can put a deal together and help them get access to working capital. Most of our clients typically don't qualify for bank lending, so we work very closely with many banks in the community. If they are unable to provide financing in many situations, they refer those clients to us, and we have typically have options that are a little bit more flexible. Thank you.
Fantastic. And Rosalinda.
Hello, everyone. I'm Rosalinda. We are Accessity. We are a nonprofit micro lending organization. We are CDFI, Community Development Financial Institution. We are here to provide access to capital primarily to entrepreneurs of colors, African Americans, Latinos, low to moderate income entrepreneurs, but we lend to everyone. We have been in Southern California for over almost 30 years. And our program, we lend from $300 to $100,000. We lend to startup businesses from day one. And our interests are between 6.99 to 14.99. We evaluate every candidate based on the 5 C's. And our maximum term is about 6 years. We service the areas of San Diego, the counties of San Diego, Imperial, Riverside, San Bernardino, LA, and Orange County. And we're here to help. Thank you.
Well, fantastic. So kind of want to get into the core thing here. So I'm going to start it out. So just assume a business is coming to you, and we're going to say they could be either or. They could either be, they have their business plan complete and all of that, and they want to get a loan and they're starting their business, or maybe they're just still in the first 6 months of their business. Really, what can your lender do for them, and what not? And I think let's be real kind of frank about that, because I think that's important for people to understand, so they're able to go into a realistic thing. And that's why I want to start with you, Robert, as the most traditional bank that's here.
So typically banks don't like to do startup businesses. They like to see a business that's been around and it's got a track record for at least 2 years. That being said, a lot of times what I'll see is they'll have a new business, but the business that they're in has got some sort of a connection to what they were doing before. So I've used this example before. Had a client come in that wanted to do a sport fishing boat for $180,000. Never was in business for himself, but he was a captain on a sport fishing boat for 10 years. So he had a proven track record of knowing how to operate the boat from both a operational and a financial standpoint. And we were able to tell a story. And as a result of that, we were able to get him the amount that he wanted. So typically what we like to see is, even if you don't have a existing track record of being in business for a long period of time, if there's a connection that we can act as a envoy for you with our credit department and tell the story. And if the individual's got a good financial standing, in other words, good savings, they may own a house, they've got a good credit score, that's something that we would really like to look at. We would like to try and be a partner with a business starting up to help it grow. And if we can't do that, then we will send it to one of our colleagues that are on the call, to either Fernando or Rosalinda or what have you, in order to get that done. My main thing is, I think that what people should do is get really close with their banker at wherever they're banking, so that they can really get a track record with that bank. And there'll be a scenario where somebody will be able to actually speak for them in that case, because they're a known person. So it's not an impossibility. You just need to have an individual that will be able to work closely with the banker.
Fantastic. No, that was really good, and kind of understanding from the banking perspective. I know kind of the opposite end. And Monica, we're going to shift to you, because you talked about very specific types of situations for people starting their business who recently came to the United States, or maybe are already living here, but have particular economic situations. And so, how does the Center for Economic Opportunity handle that?
To start, a client will contact us, and then they may be in the startup phase, they may have an existing business, and right now they might be in a recovery phase. So we work with all 3 types of businesses, and we'll help them, like if they're just starting up, to make sure they have their registration, their bank account, and then we start a pre-screen process for the IRC CEO. So it's 31 questions, and it helps them think through their business. It's like a mini business plan. And then that gets submitted to the CEO to be screened. One thing that's important to note is that for a lot of our clients, they may have a low credit score just because they haven't had a lot of credit or used a lot of credit, or something may have happened where they just didn't realize like how important it is. And we do credit counseling to help them boost their score and kind of get lender ready. So that's, we do provide a lot of support services so they can apply for loans. And there are some really interesting loan products, everything from credit building loans that start at 100, and then business loans up to 10,000 right now with 0 interest, which is a really great product. And then we have loans that go up to $50,000 with the interest rate is usually about 7.75, and that's fixed.
Fantastic. And Fernando, what about with the primary funding, kind of that early stage or pre-venture business?
Yeah, so we're looking at a couple of different things in order to really help a startup. So one, a lot of times it's more somebody that's in the service industry, and they're able to maybe acquire a contract, start on the work, but they're going to get paid, you know, in maybe 30 or 60 days, something like that. That's a scenario where we can come in and help a startup because we can leverage those accounts receivables. We can help them to expedite the cash flow process and get money into their account and cover their overhead, be it, you know, salary of an employee or just, you know, keeping the lights on, whatever that may be, right? So that's one scenario. The other would be if they have assets personally. We've helped some other companies in the past get started where the owner, you know, had some, you know, a decent personal financial statement where they owned some real estate. They didn't have income, unfortunately, because they had, you know, they really had gone all in the business, right? And so, you know, they left their existing employer, they'd really been working on the business, and they just needed some additional capital to kind of bridge between where they were and where they're trying to get. And we've been able to take real estate and provide bridge loans in those situations where they really don't have the income, but there's enough equity there where we can actually make the case that, you know, based on a business plan and when they're supposed to start seeing revenue, we can bridge them to that scenario and help them that way. So for us, again, it really comes down to the asset. Do we have accounts receivable? Is there a contract that they're working on that we can leverage? Or is there some personal wherewithal that we can fall back on and say, yeah, here, you know, there are some assets here personally. We know that we can, you know, the assets can support a loan in the event of a worst case scenario or something, right?
No, fantastic. Oralia, what about at mission-driven finance? I know you kind of have some specific paths as well.
Absolutely, yeah. So for mission-driven finance, when we do have a startup approach us, first we determine, is this a tech startup, number one? And if that's the case, the type of pathway really that we're looking for, again, is we do need to make sure that you do have a positive impact in society, whether, let's say, for example, right now, clean tech is very hot. Like that's something that we would definitely fund for a startup, as long as you have a plan to start hiring soon. So what the two things that we want to look at is, number one, that you're able to pay back, obviously, the loan, and secondly, that you'll be doing something good. But for example, like let's say even if you are a tech startup and you are pre-revenue, as long as you have, whether that means contracts or purchase orders in the pipeline, that's good enough for us to really move forward for that conversation. And then on the other side of the spectrum, let's say if you have a startup that maybe is a nonprofit or a social enterprise, and even if they're pre-revenue themselves, let's say you are maybe have a contract or even a grant in the pipeline that you need to bridge to, we have the capacity to be able to fund that. The only request that we would have in that case is that that the contract be at minimum 100K or above, because that is the minimum check size for mission-driven finance. And then just as an example, I'm thinking like one of the recent SBDC clients that we were very lucky to support was actually ChargeNet. So ChargeNet is like the perfect example of a pre-revenue tech startup. They provide the software for the EV charging stations throughout Southern California. And they were fortunate to secure a huge contract, and they had some clients in the pipeline. But in order for them to really execute on those contracts and bridge, that's where mission-driven finance came in.
Fantastic. No, I think those are some great examples and kind of understanding, you know, what you need to do. So Fred, we're going to go to you because I know your path is super clear. So let's talk about that for startup, but it's good to know that there is one that's super clear.
Yeah, like I said, we provide working capital for startup and existing businesses under the SBA 7A loan program. It's a credit scored loan program so that we can approve initial credit the same day we get the simple loan application into our office. We use the Fair Isaac small business credit scoring model, better known as liquid credit, which is the same model SBA uses in behind us now on all these small loans. Probably in excess of 90% of the loans we fund every month are pure startups, meaning the day we fund that loan is the day they're opening their doors to start selling widgets or services or whatever they're going to do. We do require that all licensing and everything be in place so that they're able to operate the day we fund that loan. All of our loans are 10-year, fully amortizing loans up to $50,000 are priced at prime plus 3 1/4, which would make the rate today 8%. adjusting quarterly. Loans over 50,000 up to 150 are prime plus 2 3/4, which would be 7.5% today.
No, fantastic. And that's good to understand. So I think, so we all saw the presentation Lucy had at the beginning. Fred's program ties very specifically in with the SBA's programming. So that's where you can kind of see where that balance does play in. And Rosalinda, what about accessibility? I know your stuff is good and clear.
Yes, we definitely lend to startup businesses from day one. We do want to see a business plan because there is no history, right? So if we need to understand what type of business are you starting, and we need to know what kind of experience you have in that industry that is going to make you successful. We're going to ask for projections. We're going to ask for a breakdown of the use of funds. So we want to make sure you are very prepared to start this business. It could be any kind of business. There's only a small list of businesses that we don't lend to, but it could be a brick and mortar. It could be a business from home. It could be a consulting business. It could be a transportation business. So we are able to fund those as long as you can prove that you have the capacity to pay with your steady source of income is super important. So if you're going to start a business, don't quit your job yet. You can transition into your business because you need that funding to provide capacity to start paying that loan because the business is not going to be generating revenue yet. So that outside source of income from you, your spouse, of anyone that wants to come as a co-borrower to provide that strength, we might be able to help.
No, that's fantastic. And always that basic core piece of advice: don't quit your day job, and always critical. So again, you can kind of start to see there's different, depending on where you're at and what you are, there's different options and different ways in which to approach it. But I think one of the things that's important is, so let's say I'm a business owner, again, that I'm looking to start my business, or maybe I'm that business who just barely started and kind of did it on my own. What is something that that business owner really needs to be thinking about, or that entrepreneur, that prospective business owner really needs to be thinking about as they're looking before they start accessing capital? Why don't we go ahead on this one? Why don't we start with you, Oralia, on that question?
Oh, thank you. I love that question. So I love this question because I am an angel investor. So I feel like a lot of that information does transfer over even to our different industries. But I would say that the number one thing that's so important for startups is, number one, definitely have something beyond proof of concept. Understand that you need to have traction with your customers and making sure like your business model is solid, whether that's B2C or B2B. Make sure there is a recurring revenue stream somewhere, whether that's 10 or 15%. Making sure that if you have that recurring revenue from the very beginning, there is going to be more predictability and consistency in the business. And if you have that solid, if you have that down from the very beginning, just your opportunities and options for funding drastically increase. So I would say that's the number one. And then secondly, making sure that you have an understanding of when I'm looking at my ideal customers, like what regions, or maybe what are the ideal customer personas that I can always continue to build upon, because that's where you're really going to be able to experience that scaling opportunity for your startup or small business.
Fantastic. And you, Fred?
Probably two things. Number one is make sure you understand what's on your credit report. If there's erroneous information on there, you need to get it cleaned up before you go sit down with a lender. And number two, make sure you fully understand how much money you need to get your venture started if it's a startup. One of the things we're going to ask you is, what size loan do you want? And the last thing a lender wants to hear was, how much do I qualify for? We need to know exactly what it's going to take to get your business up and running, and make sure that we're able to provide you with sufficient funding to make that happen.
Fantastic. And Monica? Oh, you're on mute, Monica.
When we do this pre-screen, part of that process is for the client, whether it's a startup or an existing business, to work on their cash flow, to see how much money they need to make from their business to break even. And then, of course, it is always advisable to, keep your day job. But that's really critical. So we work with them on that piece, and then also, of course, on their credit score to make sure that they have a good credit score, they can build a good credit score and maintain one.
Fantastic. And Robert?
Typically, what I like to see is someone that's got a business plan and a fallback situation. I'm thinking again of the sport fishing. If there's like the pandemic that really impacted a lot of the sport fishing, and a lot of these guys had great fallback ideas. So we want to see a good business plan. We want people to have a good command of their financials. We don't want to lend them any more than they need. So we want them to be able to tell us exactly what it is that they're going to be using the money for and how much they need. Again, a good fallback, and any other avenues that they've got to get additional investors if they need to, so that we can advise them in which direction to go. Because the idea is to give them money so that they can get what they need to do and then get them out of debt as soon as possible.
Fantastic. And just as a reminder, Robert's in Point Loma. That's why he keeps bringing up sport fishing.
Right, exactly.
Rosalinda.
Yes. So for us, as I said before, the business plan is going to become very, very important. And I think when you as a borrower think about an amount, right? You have to make sure you know how much you need, and if you can work with less, like what is your minimum and your maximum, right? So if I get 50,000, I can do X, Y, and Z. If I get 100,000, I could do A, B, C, and X, Y, and Z. So have a specific plan, because you might not know how much you'll be eligible for. Now, all of our business development officers are here to talk to you and kind of assess your situation. If we feel that you're not ready, we are going to send you to the Small Business Development Center. They are a great resource. They have funding advisors. They can prepare you for the loan, and then you can come back to us with your to fill out your application and so forth. Now, we're also going to look at, in addition to your experience and of course your credit history, you should be current on everything, or should be able to explain any hiccups from the past. If you had a prior bankruptcy, we want to make sure it's been discharged at least for a year. We want to look at your income. We want to look at any other collateral that you can have that can strengthen the deal in case, a collateral will probably can get you a bigger amount if it's strong enough. Capital, we don't require collateral, but if you have it, definitely offer your whatever collateral you have. We use vehicles that are paid off as collateral. If you have savings, right, we want to see savings, because sometimes we want to ask for capital injection, right, at least 10% in certain cases. So make sure you have some skin in the game, because otherwise, you want your lender to take 100% of the risk, and that's going to be very difficult to do. So we want to make sure you have some skin in the game. Purpose of the loan is very important, as I said. It has to make sense. Your business has to make sense. So if this is something that your lender can understand, is way too innovative that we won't understand it, we won't fund it. And make sure you are clear and transparent with all of your information. This week, I had a person looking for a loan that submitted tax returns. The tax return was incomplete, and he said he didn't have a business, that he was starting a business. But it was obvious in the tax return. I could see that there was business income, and there was a Schedule C that was missing. So people think that we cannot find out, but we can, guys, we can. So make sure you are transparent with your lender. That's all I have to say.
Fantastic. And Fernando.
I think one of the really important things for a true startup, right? A company it's an idea, essentially, you're really trying to get something off the ground. Working with somebody that can help you understand the different types of capital out there, right? Because a lot of times you may not qualify. I mean, as you can see from the lenders on this panel, there's a lot of different appetites for lending, right? So while you may not be a good fit for, you know, most of the lenders here, there might be one that's just a perfect fit for you. But then there's also the difference between you may be in a position where you don't even qualify for debt financing, right? It's just you're not far enough along. It's a great idea, and maybe you need an investor to come in and that believes in your product or your idea. And so just kind of understanding, you know, your ability to actually borrow, or do you actually need, you know, investors? I know Oralia mentioned, you know, angel investing. So understanding the difference between equity and debt financing, I think is very important. And then also understanding what the true cost is, right? Because a lot of times I've had clients that think, oh, well, you know, hey, I don't like your APR. I'm going to go out and I'm going to bring in an investor, right? And I'm going to give them half my company, right? And they think, but that's, you know, no interest on that. I can just use that money, do whatever I need to do. Then the business takes off, and suddenly, you know, that 50% that they just gave up willingly is worth so much more money than what, you know, whatever my APR was at the time, right? So just, you know, working with an advisor, understanding the different types of funding, what you're going to qualify for, and then putting a plan together to really go after what makes the most sense, whether that be debt financing, you know, investor financing, you know, equity based, whatever it is. Just understanding those options and really making the right choice is very important, I think.
No, all of this is fantastic. I mean, and that's why I wanted to have this panel. And I'm really appreciating everyone being very frank about what is realistic, what's not realistic, because it's important to kind of understand that. And so I want to pivot a little bit to something that's a bit on the current side. We know there's a lot of economic uncertainty right now. Earlier this week, we got reports on, you know, on the inflation numbers. You know, there's continuous reports about talking about a recession. We all know about supply chain and labor force issues and so forth. So kind of taking the current state of the economy into account, and sure, you can shine up your crystal ball if you want. But what, you know, a prospective business owner today, you know, taking that into account, what, you know, should they take that into account, not take into account, or how should they take that into account? Why don't we go ahead and start with you, Fred, on that question?
Yeah, absolutely. You have to be cognizant of what's going on with the economy. One of the biggest problems I've seen for small business owners here in the last year has been employees, the ability to acquire ample employees in today's environment. So make sure you're aware of what's going on there. Make sure that your business can sustain an increase in interest rates. I know from an underwriting standpoint, we underwrite everything at least 2 percentage points above where the current rates are today, just to make sure in an increasing interest rate environment, the borrower can sustain profitability.
Fantastic. What about you, Monica?
Yes, we're talking to our clients about inflation and a changing economic situation. And there are some clients who are, they're in the retail sector. So when they're doing their business planning, some of their projections, we're encouraging them to lower their expectations for sales and just say, we don't know what's coming, so maybe you need to project lower sales. And then we have other clients. I'm working with two startups for transportation companies. So these are trucker, they have trucking, and one has trucking and dispatch experience, and their industry is really growing. So that kind of looks like a more healthy sector, but across the board, we definitely are paying attention to inflation and sharing that with our clients, like how they're going to insulate themselves and build their business given some uncertainty.
Oh, fantastic. Oralia.
Yeah, so I would say if you are a startup that is still very early in the market, number one, please reach out to your business advisor, or obviously the SBDC, because more than anything, I think what's really important is staying agile as far as being ready to pivot when things start accumulating, right? Again, like the whole thing with the supply chain that's still ongoing, unfortunately, with inflation, inflation obviously being on the rise. I think it's important that you do continue to really consult with business advisors if you have access to them via the SBDC. But then let's say on the other side of the spectrum, if you are a startup that already has funding and you're more like later stage startup, maybe like closer to the $1 million type of annual revenue startup, then I would say, please also circle back with your current lenders, funders, or investors, because you want to let your financial partners know early on, like, hey, we anticipate that we might have the following challenges. How can we start working together? Whether that means possibly modifying your lending terms. I think that really is important, and sometimes one of the things that tends to be overlooked for the early stage startups.
Thank you. Fernando, you and your crystal ball, what have you got?
Yeah, it's definitely important to take all of these factors into account. You know, there's a lot of volatility in the market, so you should be factoring into that. You know, the biggest thing that we're seeing from a lot of our clients right now is a significant amount of margin compression, right? So what they were paying for product 18 months ago or even 6 months ago and what they're paying for product now is very different. And you really need to have the foresight to either buy ahead to, you know, kind of lock in some of that, you know, some of that cost over a long period of time, or, you know, really look down the line as well and just figure out where do you need to move your prices now to kind of anticipate what that increase in cost is going to be, right? Because it's much easier to increase slowly over time than to get to a point where you're like, oh my God, we're underwater now. We're actually losing money on these deals. And then you do a huge hike in price, and then suddenly you start losing clients left and right because they're going to go to somebody else that hasn't quite figured it out yet, and they're going to take a loss on the deal, and then it just turns into this whole, you know, kind of mess of you know, the hot potato that gets tossed around the room. But so I think, you know, margin compression, be very aware of where you price things out, be forward thinking. We've, you know, as a company, we have been adjusting our rates for several months now in anticipation of, you know, the rate increases that are coming, right? So we've done little incremental increases over the past, you know, about 6-7 months now, just to make sure we're on pace, and we've had those discussions with our clients. And, you know, have those conversations with your suppliers as well as you're starting these new relationships. It's okay to have frank discussions with your suppliers, ask them how they're doing, even ask for financials if they're willing to provide, you know, some financial information, see how they're doing. We've had clients that were very dependent on a specific supplier. That supplier goes out of business all of a sudden. And then they're shocked about it. Is the crazy thing, that no backup, never saw it coming, and they just didn't have a really good open dialogue with their supplier to understand if they were even going to be experiencing issues due to all of the things that are going on in the world right now. So yeah, just really have discussions, you know, try to get ahead of things as much as you can. You still are going to have issues, and just plan for that and try to work through them.
Fantastic. Rosalinda, how's the changing economy impacting Accessity and its clients?
Well, I can tell you that definitely inflation is having a huge impact in a lot of our clients, especially those in the food and beverage and fitness industry. Those are industries that are, especially now that we have the indoor mask back by the CDC, is advising everyone to mask on again indoors. So, but our rates are not changing. So we're probably going to become more attractive to business owners. However, my advice to them is prepare, because we don't know how, you know, how much longer this inflation will continue to you know, to exist. And you really have to plan for that. Plan for all the possible worst scenarios before you launch your business or before you ask for capital. Build reserves, you know, if you're planning to start your business in a month, right? If you don't think you have the amount of savings, save as much as you can. Keep an eye on what's going on with all the economic situation. Consult the experts at SBDC. Talk to your banker. That's very important. Your bankers are very knowledgeable on everything that is going on. And listen to the economic news, because all of those things can play a role in your decision about if this is the right time to start my business. Should I wait, or should I save more money? It's important that you realize that a loan costs money, right? You're purchasing a debt that you have to pay back. So you need to realize, if this loan is going to help me grow, then it will be cheap. But if the loan is just, I'm going to use the loan to pay debt, then that loan is going to be too expensive. So think of all those things. You don't want to get deep in trouble when it comes to your finances. You want to make sure you have plenty of money in case things don't recover as fast as we would like to.
Fantastic. And Robert, at Banner Bank, I'm sure you're talking about this plenty.
Yeah, so we're doing a lot of loans and a lot of lines of credit, both consumer and business. Excuse me. But the one thing that we need to do is, in the financial world, is to really explain what the product is that we are suggesting to the client. Most of ours, if not all of our credit facilities, are based on the prime rate. And so, as we know, the prime rate keeps going up and will be. So as everyone else has said about, forward thinking, we want to make sure that we explain to the borrower that this is based on the prime rate, and this is what could happen to your payment if the prime rate goes up X amount. So they're forecasting that it may go up another %. It's already gone up, 0.75 recently. So these are things that will really change the payment structure for somebody. And if they're working on tight margins already, it's something that could throw them off the cliff. So even if we're doing a home equity line of credit, which a lot of people use for business, again, that's a prime plus a spread, which is determined on your credit. But I keep telling everybody that I talk to, I don't want you to be up at night worrying about your finances. It's not worth it to me to do a loan if that's the case. It's something, the one thing that we have to remember is that we're all background noise to businesses. Their main thing is that they're whatever their business is that they're doing. So we want to support them. We don't want to be a big thorn in their side if we don't disclose everything properly. So I think it's incumbent upon us to really educate what could happen, and then we're able to point them in the right direction in terms of what kind of credit facility that they would need.
Fantastic. So I think, lots of great perspective on what's happening with the economy, things to be aware of. Also, what I really appreciate is kind of seeing how different lenders are handling it as well, where you have rates that are firmly attached to prime, others that are looking more at asset-based and what their current market is, and then others based on particular missions or functions of the business. And so I think that those are all critical. So that we're going to come to our last question, and it let you all think about it for a second here, is of course, always my favorite, which is a success case. And I know you've each had a couple of examples, but kind of have one success case, and as we conclude to end a bit on the positive. But again, thank our panelists, and the Meet the Lender series is sponsored by CDC Small Business Finance, United Midwest Savings, Pacific Premier Bank, Banner Bank, Marble Bridge Funding, Civic Communities, Founders First Capital Partners, and Primary Funding. So appreciate everybody for that. And so we'll go around, and each of you can talk a little bit about a success case. And why don't we go ahead and start with you, Monica? You always have some fun stories.
Well, one success case is we have a client who she's based in San Diego and is opening her brick and mortar wellness and fitness center. And I think she was actually at the last lenders meeting. So it's a woman-owned, minority-owned business. And she has been working steadily actually with the SBDC on various trainings, California Dream Grant to get some additional capital for startup, and is now taking the next steps to apply for a $10,000 business loan. It kind of speaks to like the SBDC network strengths of working together, and there are so many different trainings out there that are available for you to work on your business development and get the skills that you need and then be lender ready.
Fantastic. And Robert?
So recently we did a deal for an artificial intelligence business, and it was not quite a startup, but it was very new, not a lot of revenue to show. But again, we told a story. The individual had a long history in technology, had a lot of savings and a lot of collateral that was available had we needed to do a lien as an abundance of caution. And basically what in the write-up I explained, you know, all of the different things that this individual had done in their lives, and it's always been an upward trajectory for them. And we were able to get a $100,000 line of credit. I don't think, had it not been as strong credit-wise and everything, I don't think it would have gone, but all of the different pieces aligned properly. And, you know, we did a little politicking along the way as well. So, so it was something that was a good success story.
Fantastic. What about you, Fernando?
Yeah, we had actually had a startup recently, furniture manufacturer based here out of San Diego that landed a really good-sized contract with a national bank to basically provide furniture for offices that they were remodeling in their corporate offices. So they had 2 POs for $1 million a piece, and did not have the capital to, you know, bankroll that. So we were able to help them, you know, to basically acquire the raw materials that they needed to manufacture these desks and get the ball rolling on the capital they were waiting to come in to you know, to get this contract going. And now they just called me yesterday, and they have the banks awarded them another $4 million in purchase orders. So I mean, huge growth for them that they did not expect. And luckily we were able to figure out a way to help them out with that, with these contracts. But again, they've been in business about 1.5 years, you know, had been doing fine and getting some deals done, and then suddenly had this huge windfall of a contract that we were able to help them leverage to get the material they needed to actually keep up with the pace of the construction.
Fantastic. What about you, Fred?
In the last couple of days, I was just looking, we funded 4 pure startups in various industries, anything from kitchen tune-up to Sam the Concrete Man, which refinishes concrete driveways, that type of thing. A garage design group that will come in and refinish your garages, and a property management group. So across the spectrum of different types of startup businesses that we do day in and day out.
Fantastic. And what about you, Oralia?
All right, really quickly, because I see that we're short on time. So, but one of our most recent fundings for startups was actually Verity Packaging, which is a light manufacturer here in San Diego, and they also happen to be an SBDC client. Given that we don't look at credit scores nor ask for personal guarantees, we were really excited about this specific startup because number one, it is a woman-owned startup, phenomenal leadership, again, doing something positive for the environment. And most importantly, they had a strong plan in place for workforce development. So they were hiring a bunch of folks for good quality jobs. And they've only been in business at that time for less than 2 years, but they had purchase orders for like 6 figures type of contracts. And we were excited about that. So that was a recent success story.
Fantastic. And Rosalinda, you've always got a good story.
Yeah, just recently, actually, I think as of yesterday, we funded an Asian market in San Diego. They wanted, I think they wanted 50,000. We were able to provide 40,000 to them. One of the things that we we talk about was instead of buying new equipment for the supermarket, to buy equipment that is used to be able to reduce their their cost. They had signed the lease already. They had good savings. This is a woman from Thailand. She was able to get some funding from her family in Thailand, and her husband was able to come in to help with the additional capacity because he has a full-time job. And she was very excited that she finally is going to open her Asian market. And it was very challenging. It was very challenging deal. We went back and forth with them a lot. They thought getting along was going to be easy, but it's really, at the end of the day, you have to show that you have the capacity to pay. And their advisor actually told them, this is a great deal for you. You won't get any better deal than this. So take the money. So anyway, they did, and they are very excited. And today I received an email saying thank you, that they're very grateful for being able to get this funding and very excited to open the new Asian market in San Diego.
These are all fantastic. So, we went the roller coaster of the honest, the tough times that are in from an economic standpoint, but absolutely there's always successes that continue to be. And so I want to thank Robert, Rosalinda, Fernando, Monica, Fred, and Auralia for being on today. And again, we're the Small Business Development Center. We're not a lender. We're here to kind of help you guide, help you prepare, help you navigate and talk better through the specifics of the situations that are complicated. And so again, also want to thank Lucy from the SBA district office. And again, thank our sponsors, which include CDC Small Business Finance, Primary Funding, United Midwest Savings, Pacific Premier, Banner Bank, Marble Bridge Funding, Civic Communities, Founder First Capital Partners, and appreciate everybody for being on today. And everybody have a fantastic weekend. Thank you.
Thank you.